Okay, so we've got a pretty hefty stack of notes here,
Oh, yeah.
all about Georgia insurance laws, rules, and regulations.
Right.
And I think our listeners, they trust us
Yeah,
to dive deep into these kinds of things
absolutely.
and
Yeah.
bring them the stuff they really need to know.
Yeah, cut through the noise a little bit.
Exactly.
Get to the meat of it.
So that's our mission today
That's it.
with this Georgia insurance deep dive.
I think, it's a pretty comprehensive system they've got down there, and it's our job to kind of break it down for folks. Starting with, I guess, who are the main players?
Right. So the first thing that jumps out is this figure, this person, the insurance commissioner,
Okay.
and the insurance department.
Right.
So it seems like this commissioner is the top dog,
Yeah,
the one in charge of enforcing all of these insurance laws.
definitely. Yeah, the commissioner is kind of the central authority, and their role goes beyond just sort of reacting to violations or problems. They actually have the power to shape how insurance operates in the state proactively.
Okay.
What are some of the powers that jump out at you?
Well, I mean, they can organize the entire department,
Right.
decide who does what. But
Yeah.
to me, the biggest thing is they get to make new rules,
Okay.
even rules about things like HIPAA.
Yeah.
And these rules aren't just, decided in secret, are they?
No, not at all.
They have to be made public for 10 days.
Yeah.
And there has to be a chance for people to comment on them
Absolutely.
before they take effect.
Right.
So that feels like a pretty big deal in terms of transparency.
Yeah. That's a key part of the process.
Yeah.
It's designed to make sure that those regulations are really thought through and that the people who are going to be affected by them have a say.
Yeah.
And it helps prevent rules that might inadvertently help one part of the industry
Yeah.
without really benefiting the public.
Okay. That makes sense.
Yeah.
And it's not just those big overarching rules, is it?
No.
The commissioner also gets to issue rulings,
Yes.
which I think are kind of like interpretations of how the existing rules work.
Right. That's a good way to put it.
Yeah. And they even get to design
Yeah.
the forms, the official forms that insurance companies and agents have to use.
That's right.
So it seems very hands-on, this role.
It is, yeah. And by doing that, they kind of bring clarity and consistency to the whole industry.
Yeah.
It makes it easier for everyone to understand, their obligations,
Right.
what they need to be doing, and hopefully to operate effectively.
Now, here's where I think it starts to get really interesting.
Okay.
The commissioner can examine insurance companies
Uh-huh.
and launch investigations if they think something's off.
That's right. Yeah, that power to examine is really vital. I mean, particularly for those domestic insurers, the ones based in Georgia,
Right.
they have to be examined at least every 5 years.
Oh, wow.
And that's all about assessing their financial health,
Right.
making sure they're operating within the law.
Okay.
And then these investigative powers,
Right.
give the commissioner the ability to step in
Yeah.
when potential problems are identified,
Right.
which ultimately protects policyholders.
Okay, so they do the investigating.
Yeah,
And then if they find something, they can hold these public hearings.
that's right.
Now, what's interesting to me is it's not like a formal courtroom thing
Right.
with strict rules of evidence or anything like that.
Yeah, it's a little bit more, a little bit more relaxed in terms of the procedures.
But they still have to give 10 days notice
Absolutely.
to anyone who's involved.
Right.
And get this, the commissioner can take sworn statements, issue subpoenas, demand documents.
They've got real power in those hearings.
Yeah, it's like they can act like a judge
That's a good way to put it.
in this more focused setting.
Yeah.
Without all the red tape of a regular court case.
Yeah, it's about finding that balance between efficiency and fairness.
Right.
So, while avoiding those super formal procedures
Yeah.
lets them resolve things more quickly,
Right.
you still have those requirements for notice
Right.
and the right to participate.
Right.
And the commissioner still has that power to gather evidence to
Right.
make sure that everything's based on facts.
Okay, so everyone's protected,
Okay.
even though it's a little less formal.
Exactly. And then that 30-day deadline to publish any orders,
Right.
that helps keep the process moving.
Right. Keeps it from dragging on forever.
Exactly.
Okay, so then you get into the enforcement side.
Okay.
So they investigate, they hold hearings, but they don't stop there, do they?
No, they have some real teeth
Yeah.
when it comes to enforcing the law.
So they can issue orders to stop the bad behavior.
Right.
And I noticed there's a difference between regular orders
Yes.
and these emergency orders,
Yes.
which can kick in right away if there's what they call an imminent peril,
Right.
which sounds pretty serious.
Yeah, that's for when something needs to be done immediately to
Right.
protect the public.
But even then, the party that's affected has 10 days to request a hearing.
Exactly. It's like saying, look, we had to act fast,
Right.
but you still have the right to challenge this decision.
Okay, so there's still due process,
Absolutely.
even in an emergency.
Absolutely.
Okay, and if things really escalate,
Yeah.
the commissioner can even refer potential criminal violations to the district attorney or even file civil lawsuits.
Right. They have a range of options.
Plus, there are penalties like probation or fines.
Yeah.
And these fines can be up to $2,000 per violation,
That's right.
or even $5,000 if the insurer knew or should have known that they were breaking the rules.
Right. So if it was intentional or they were negligent in some way.
And each instance of breaking the rules counts separately.
Yeah. So those fines can really add up.
Wow, so it's a pretty strong message
It is.
that they're serious about compliance.
Definitely. Those higher penalties for knowing violations.
Yeah.
Those are really meant to discourage anyone from intentionally doing wrong.
Right, so you can't just say, oh, I didn't know.
Exactly.
Okay, so what happens if someone doesn't agree with the commissioner's decision?
Well, they have the right to appeal,
Okay.
and any appeal goes straight to the Fulton County Superior Court,
Okay.
and they've got 30 days to file that appeal.
Okay, so it's a pretty specific route
It is.
and a pretty quick turnaround.
Yeah. That's by design.
Yeah.
It provides a predictable process
Right.
for resolving those legal challenges.
Right, so you don't have to wait years and years to
That's
figure out what's going to happen.
Right.
Okay. So all this money from the fines and fees,
Yeah.
where does that go?
Well, it goes straight to the state treasurer
Okay.
for the general fund.
So it's not like the insurance department gets to keep it
No, not at all.
and use it for whatever they want.
Right. That's pretty common in
Yeah.
in regulatory frameworks.
Okay.
The idea is that those penalties should serve as a deterrent
Right.
and also as a source of revenue for the state.
Right. Okay.
It prevents any sort of incentive for the regulatory body
Right.
to just levy fines to get more money.
Okay. Makes sense.
Yeah.
So one last thing about the commissioner's powers.
Okay.
They can examine company records as often as they need to, but at least every 5 years.
Right. Especially for those Georgia-based insurers.
Right. And they have access to pretty much any information they need.
Yeah, pretty much anything that's relevant.
And they can even investigate for unfair competition or deceptive practices.
Exactly. It's all about making sure everything's above board.
Okay.
And those written reports from these exams, those can be used in official proceedings.
Right.
But the company that's being examined, they get a copy 20 days beforehand.
Okay, so they have a heads up.
Right. It's all about fairness.
Yeah.
And of course, all this information is kept confidential,
Okay.
to protect sensitive business information.
Right.
But one thing that kind of caught my eye is that
Yeah.
sometimes the companies actually have to pay for the examination itself.
Wow. It's like having to pay for your own audit.
Yeah, it's kind of like that.
Okay, interesting.
But, it's all part of
Yeah.
making sure that the regulators have the ability to
Right.
really look under the hood and make sure everything's running smoothly.
Okay, so next up, in our notes, we have these different types of insurance companies.
Okay.
We have domestic, foreign, and alien, which I guess
Oh.
just refers to where they were formed legally.
Right, that's it.
So domestic, that means they're incorporated and do business in Georgia.
Exactly.
Foreign means they're based in another U.S. state.
Mm.
And alien, that means they're chartered outside the U.S.
That's right.
But the main point here is that all of them need a certificate of authority to operate in Georgia.
Yes, that's the key takeaway.
So it's kind of like they're licensed to do business there?
Yeah, you can think of it that way.
Okay.
And that ensures that no matter where they come from,
Right.
they've met Georgia's standards
Okay.
and they're subject to its oversight.
Then we have the difference between stock and mutual companies.
Oh,
So stock companies are owned by stockholders, by investors.
right.
They're focused on making a profit.
Uh-huh.
And usually policyholders don't share in those profits.
Right, they're non-participating
Okay.
in the industry jargon.
Whereas mutual companies,
Yeah.
those are owned by their policyholders.
That's right.
And those policyholders, they get to vote on the board of directors.
Yeah.
And they might even receive dividends.
Exactly. So they are participating.
Okay, so there's that distinction there.
Yeah, and it's helpful to understand, because it can affect how the company operates.
Right.
A stock company might be more focused on shareholder returns.
Yeah.
Whereas a mutual company might be more focused on
Right.
the needs of its policyholders.
Okay, and then the notes actually give us the terms
Oh, yeah.
for switching between those two structures.
Right.
So if a stock company wants to become a mutual company,
Yeah.
that's called mutualization.
That's it.
And if a mutual company wants to become a stock company,
Yeah.
that's demutualization.
Right. So it can go both ways.
Yeah.
Companies can change their structure.
Okay, then we have authorized versus unauthorized insurers.
Okay. This is an important distinction.
Yeah.
Authorized insurers, they're also called admitted insurers.
Right.
And they have that certificate of authority that we were talking about.
Right.
Unauthorized, also known as non-admitted insurers, they either didn't apply for a certificate
Okay.
or they were denied one.
Right.
So they're not allowed to sell insurance in Georgia. Right.
And one key rule here is that any insurer that's controlled by another state government or a foreign government,
Okay.
they cannot get a certificate.
Okay. So they're keeping the control within the state.
Exactly. It's about maintaining regulatory authority.
Okay. That makes sense.
Yeah. And this distinction is really important for consumers.
Yeah.
Because if you're dealing with an authorized insurer,
Right.
you know that they've met Georgia's standards.
Right.
They're subject to its oversight.
Okay.
Unauthorized insurers are operating outside of that framework,
Right.
and that can be a lot riskier.
Yeah. Okay. That makes sense.
Yeah.
Then our notes go on to list these 6 main categories of insurance coverage in Georgia.
Right. It's a way of organizing the market.
So we've got life, accident, and sickness, property, marine, and transportation.
Okay.
Casualty, surety, title.
Okay.
And those title insurers, they have to be stock insured.
Right. And they can only write title insurance and closing protection. Right. And then finally we have HMOs.
Yes, health maintenance organizations.
Right. And there's also this specific rule that reciprocal insurers and Lloyd's insurers,
Okay.
they can't write life insurance in Georgia.
Right. So there are some specific limitations.
Right. So it seems like they really carve out these specific roles
They do.
for different types of insurers.
Yeah, and it helps to have these classifications
Right.
so that they can create regulations that are tailored to each type of coverage.
Okay.
Because the risks and the characteristics of each type of insurance are different.
Okay. So if an insurance company wants to get that certificate of authority,
Yeah.
What do they have to do?
Well, they have to submit an application.
Okay.
And that application includes things like the company's name,
Okay.
their location, their bylaws, which are their internal rules,
Right.
and then there's a fee.
Okay.
And these certificates, they don't last forever.
Oh, really?
Yeah, they expire on June 30th every year, and they have to be renewed by March 1st,
Okay.
along with an annual report.
So it's kind of a regular checkup.
Yeah, you can think of it that way.
Yeah. Okay. Interesting.
Yeah, and then one kind of interesting thing is that banks and bank holding companies, they can actually sell some types of insurance.
Oh, really?
Yeah, things like credit life and health insurance related to loans,
Right.
crop hail insurance,
Uh-huh.
and insurance on collateral for loans.
Okay. So they get a little carve out there.
Yeah, it recognizes that
Yeah.
there's a close connection between lending and certain types of insurance.
Okay. And the commissioner, they have quite a bit of power
They do.
when it comes to these certificates of authority.
Right.
I mean, they can deny them, suspend them, revoke them,
Yeah.
or even refuse to renew them.
Yeah, after holding a hearing. And the reasons for doing so are pretty broad.
So they could do that if the insurer is breaking laws or violating the commissioner's orders,
Right.
if they're not financially sound.
Yeah.
If they're engaging in unfair claims practices,
Yeah.
if they refuse to be examined, if they fail to pay judgments against them,
Right.
or even if they're connected to an unauthorized insurer.
Yes, except for surplus lines.
Right. And there are penalties too, right?
Yes, the penalties can be pretty hefty.
Yeah.
Anywhere from $1,000 to $5,000 per violation.
And if they don't meet the basic requirements,
Yes.
then the suspension or revocation is mandatory.
Exactly. So it's really serious business.
Yeah.
They want to make sure that only
Yeah.
financially healthy and ethical insurers are operating in Georgia.
Right.
And that mandatory part that really emphasizes how important these fundamental standards are.
Okay, so then there's this language simplification requirement.
Yes.
The commissioner gets to set standards for certain personal insurance policies to make sure they're written in plain English.
Right. It's all about making sure that people can actually understand what they're buying.
Okay, that makes sense.
Yeah.
Finally, there's this thing called the claimant information request.
Okay.
So if you're making a liability or casualty claim against someone,
Yeah.
their insurer has to give you a sworn statement
Right.
with the names and coverage limits of everyone who might be liable.
Exactly. And they have 60 days to do that
Um,
after they get your written request.
Okay, and those people who might be liable, they also have to respond, right?
Yes, they have to give you the names of their insurers,
Okay.
and they've got 30 days for that.
Okay, so it's all about making it easier
Exactly.
to figure out who to go after.
Yeah, it promotes transparency
Right.
in the claims process.
Okay, so let's shift gears and talk about insurance transactions and licensing.
Okay.
So the notes define an insurance transaction really broadly.
It is a pretty broad definition.
Yeah, I mean, it covers trying to sell someone a policy,
Uh-huh.
actually executing the contract,
Right.
even advising someone on what coverage they need or how a claim will be handled.
Yeah, pretty much anything related to the business of insurance.
And you can't just jump in and do any of this, can you?
No, you have to be appointed by an insurer to
Ah.
do any of that.
So you need their permission slip, essentially.
Yeah, you can think of it that way. And that's important
Yeah.
because it creates a link between the agent and the insurer.
Right.
And that fosters accountability.
Okay, and you absolutely need a license
Yes, absolutely.
to sell, solicit, or even negotiate insurance.
Right.
And you need a specific license
Right.
for the type of insurance you're dealing with.
That's right.
Insurance agencies need their own licenses too,
Yeah.
and those have to be renewed every 2 years.
Exactly.
And if you've had an insurance license refused, revoked, or suspended,
Uh-huh.
you can't be involved in an agency.
Right. You can't be an owner, officer, or director.
And you can't get paid for any of these activities
No.
without a license.
Right. And the penalties for doing so are pretty serious.
Yeah, I mean, it's a misdemeanor.
Right.
And you could even go to jail and be fined.
That's right. So it's not something to mess around with.
Yeah, they're not messing around.
Definitely not.
Okay, so are there any exceptions to these licensing rules?
Well, there are a few.
Okay.
For example, you can still receive renewal commissions
Okay.
for insurance that you sold when you were licensed.
Right.
And there are temporary licenses
Right.
that allow for compensation.
Okay.
And then certain individuals like insurer or agency officers who are doing administrative work that
Yeah.
doesn't involve commissions,
Right.
underwriters, loss control specialists, claims adjusters,
Right.
special agents who are assisting licensed agents,
Okay.
employers who are administering their own benefit plans,
Wow.
risk inspectors, training supervisors as long as they're not selling,
Okay.
and those who are just involved in advertising.
Right. So people who are kind of supporting the process,
Exactly.
but not directly selling.
Right. It's about recognizing that not everyone
Right. In the industry is directly involved in selling or negotiating insurance.
Okay, so then what about the specific responsibilities of an insurance agent?
Okay, well, the main thing is that anyone who sells insurance,
Yeah.
tries to sell insurance, or helps someone buy insurance,
Right.
they need a license.
Okay.
And they have to be actively appointed by at least one insurance company.
Okay, and if they don't have that appointment?
Then their license is considered inactive,
Okay.
and they can't really do much.
Right, and one thing that agents can't do
Yeah.
is accept payment directly from a customer.
Right, unless they're licensed as a counselor.
Right.
It's about preventing conflicts of interest.
Okay, so you can't just, charge someone a fee
Right.
for helping them pick out insurance.
Exactly. You have to be compensated by the insurer.
Okay, so that keeps it all above board.
That's the idea.
Okay.
Yeah, and having that active appointment,
Right.
That really links the agent's authority.
To a specific insurer, so
Yeah.
it makes it clear who they're representing.
Okay. And then there are some record-keeping requirements too, right?
Yes, there are, agents have to keep the insurance commissioner updated on any changes to their business information or their personal information.
Okay, so like their address, their name.
Exactly, their trade name, the insurers they represent.
Okay.
All that stuff has to be reported within 30 days.
And they have to keep detailed records
Yes, that's right.
of their transactions for at least 5 years.
Right, that includes things like copies of contracts,
Right.
premium amounts, types of coverage, who else was involved in the sale,
Wow.
who received commissions.
I got a lot of paperwork.
It is, but it's all about creating an audit trail.
Right.
So that if there's ever any question,
Right.
you can go back and see what happened.
Okay, that makes sense.
Yeah, and these administrative requirements,
Right.
they're really important for consumer protection. Having accurate and up-to-date information
Right.
allows a commissioner to communicate with licensees,
Yeah.
and the record keeping just facilitates audits and investigations.
Right. So if something goes wrong, they can figure out what happened.
Exactly.
Okay. So they also have to report the premiums they collect.
Right. Yes, absolutely.
Okay.
They have to report those to the insurance company and make sure the amount is correct, as stated in the contract.
And they can get in big trouble
They can.
if they don't do that, right?
Yeah, I mean, willfully failing to report premiums
Yeah.
can be a misdemeanor or even a felony if the amount is large enough.
And they have a fiduciary responsibility, right?
Yes, that's right.
To properly account for all those premiums.
Exactly.
And any refunds that are due. And they can't mix those funds with their personal money.
No, that's called commingling.
Right. And that's a big no-no.
Big no-no.
Yeah.
And violating these rules can lead to losing your license and facing fines.
Okay, so there's a lot of trust involved here.
There is
And a lot of responsibility.
Yeah, I mean, you're handling other people's money.
Right.
So it's taken very seriously.
Right.
And these regulations are there to protect both the insurers and the policyholders.
Okay, that makes sense.
Yeah.
Then there are some rules about commissions, right?
Yes, definitely.
So you can't pay or accept commissions from anyone who's not licensed.
Right, that's a big one.
And you can't get commissions for selling types of insurance that you're not licensed to sell.
Exactly.
And you can only share commissions with other licensed agents who are licensed in the same line of insurance.
That's right.
So it's all about making sure that only qualified people are being compensated for these insurance sales.
And it helps to keep things fair.
Okay.
Prevents unlicensed individuals from profiting off of insurance sales.
Okay. And what about placing policies with insurers that aren't licensed in Georgia?
Okay. That's a special area called surplus lines.
Okay.
And you need a specific license to do that, called a surplus lines broker license.
Okay.
And generally, you're supposed to use insurers that are admitted in Georgia.
Right.
But if you do need to place a policy with a non-admitted insurer,
yeah,
there are rules you have to follow.
Right.
And even if you illegally place a contract with a non-admitted insurer, the contract is still valid, but you'll face penalties.
Okay, so what kinds of penalties are we talking about?
Well, you might have to pay the taxes and fees that an admitted insurer would pay.
Right.
You could be held personally liable for the amounts that the policy should cover.
Okay.
And you could face misdemeanor charges.
So it's really best to stick with licensed insurers.
It is, whenever possible.
Yeah.
That's the best practice.
Okay.
And the surplus lines broker license is there. Right.
For those situations where maybe a business has a very unique or high-risk operation.
Okay.